Warren Buffett is making moves. The Oracle of Omaha has been quietly selling stocks and building a massive cash pile. Berkshire Hathaway's cash reserves have reached an unprecedented record high, sparking intense debate among global investors. With significant trims in major holdings like Apple and Bank of America, many wonder if he's bracing for a storm. Specifically, rumors are swirling about a potential 2026 stock market crash. Is Buffett seeing the cracks before everyone else? Historically, Buffett has always increased his cash position before major corrections, waiting for the perfect moment to strike. His philosophy remains simple: be fearful when others are greedy, and greedy only when others are fearful. While no one can predict the future with certainty, his actions speak louder than words. Are you ready for 2026? Buffett is building cash. Now let's dive into how you can prepare for a potential 2026 market correction. Buffett watches the Buffett Indicator, the ratio of market cap to GDP. Currently, it's signaling a significant overvaluation. His primary defense is the margin of safety. Only buy when a stock is priced well below its true value to provide a cushion. Regular investors should build dry powder, cash set aside to buy the dip when others are panicked. He leans into defensive sectors like insurance and energy, businesses people need regardless of the economy. Remember, there are no called strikes in investing. You can wait as long as you want for the fat pitch. Preparation is key. What's your strategy for 2026? Let's discuss in the comments below. Warning signs are clear. Now in part 3, we look at the reward. How to buy when everyone else is selling. Buffett views a market crash as a giant sale. While others see loss, he sees an opportunity to buy at a steep discount. He looks for a wide moat, honest management, and a rock-solid balance sheet with low debt. This requires extreme patience. The market transfers money from the impatient to the patient. Wait for your moment. Buying during a crash sets the stage for massive wealth. Once the recovery begins, compounding takes over. The hardest part isn't finding stocks, it's sticking to your plan when the headlines are screaming panic. That concludes our series. Rewatch parts 1 and 2 to stay sharp and subscribe for more. Good luck out there.